We just got the Fed report that came out. Fed Jerome Powell just got done speaking. This is incredibly bullish, and we are seeing the SPY having a bullish reaction, but overall a lot of volume. So there's a lot of key things we got to talk about here in this video, as well as this mega bounce with AMC stock that I think is coming throughout the rest of this week. Let's get into all of this information, guys. Hit the like button for me if you are buying AMC, if you are excited, if you are holding your shares, and if you have not sold a share, hit the like button for me. Consider subscribing to the channel as well. So first thing that I want to point out is the S&P 500. Like I said, these very volatile moves off of the initial report, we did see a move to the downside, hit $460.75, and then made a sharp recovery to the upside, and then we have been gradually making our way back up to the upside. So the markets, they're going to have to digest this for the next 2 days. Really, tomorrow you're going to see a big move to the upside or to the downside as people overnight tonight have time to try to figure out what this means for the broad markets. There is a lot of key things though that you guys need to know that support a bullish rally and the de-hedging of all of these short positions that these hedge funds that have been taking out on AMC, as well as all the options that will cause a lot of buying power and cause some shorts to cover on these short-term hedging trades that they have put on with AMC, but with mid caps in general. Now, obviously, I'm not a fortune teller. I don't know tomorrow or overnight tonight. This could be digested to the negative side, but it's definitely looking like this is going to be a positive reaction. Now, let's get into exactly what the Fed says, and then let's get into this mega bounce situation with AMC, where we currently sit, because we know the short interest is at all-time highs here today. So this says the majority of Fed members forecast 3 interest rate hikes in 2022 to fight inflation. Key points. Wednesday's forecast showed 12 out of 18 FOMC members expect at least 3 rate hikes next year. That's up from September's forecast, where half of the Fed members saw at least 1 hike in 2022. The Fed also dialed down its GDP projects for the year and raised its inflation expectations for 2021, 2022, and 2023. Now, when the Fed is raising interest rates, it's going to be by 0.25%, so a 0.25% each time. So by the end of 2022, you're looking at an interest rate at about 0.75%. Which, considering where inflation was and where interest rates were in the 80s, this is definitely a bullish sign. Inflation was over 15%, close to 20% in the 80s, and we just got our highest inflation reading since 1982, whereas the interest rates had to go to 19% at the highest. We had a higher interest rate than the rate of inflation to bring that inflation back down. So this in all is hawkish. It's not a great thing for the markets, but it's better than what could have been announced. They could have said that they're raising rates 4 or 5 times in 2022 if they felt the need to do that. So this is definitely a big win for a lot of these shorted stocks in general. Let's just take a look at what the GDP estimates are. But first, I want to point out the fact of Jerome Powell is communicating this very, very well. He said, and what he just said in his meeting is essentially, we're going to go based off of not just inflation, but a majority of the calculations of if we're actually going to raise rates 3 times in 2022 or 2 times in 2022 is going to be based off of unemployment numbers and how many job openings there are. So it's still up in the air. We're expected to get 3, but if unemployment is not continuing to get better, then you're not going to see those rate hike increases. And that is room for the markets to price in bullish activity, more people to buy stocks. Now, it says the Fed raised its GDP projections to growth of 4% in 2022, up from 3.8%. The central bank lowered its GDP projections for 2023 to growth of 2.2%, down from September's projected 2.5% growth in 2023. So they're slowing down their projections of growth, which is also going to be a good thing because you don't want the economy overheating. So at least in the next year or two, this should be good. And like I said, it comes down to the fact that the Fed could have been way more hawkish, and the markets have really been pricing in a very hawkish Fed, which he was, but not too hawkish. There's a very fine line there between being too hawkish on the the markets and not hawkish enough, not addressing what is going on in the broad financial system. Now let's get into AMC and let's take a look at AMC. We're down 3.67% right now. We're still, like I said, seeing the digestion, but we are still up from where we were at, down almost 8% at $22.53 earlier in the day today. So we're currently at $23.66 per share, and I do expect a continued big move throughout the end of the day. Either a move back down to the downside to retest the lows, or a move back to the upside. I do think this is going to be interpreted by the end of the day. We still have about half an hour left of trading. It will be a bullish reaction. Now, if you guys are watching this after market closes, this information is very relevant. It doesn't matter what happens today with the price action, because tomorrow and Friday, those are the big days that I want to be watching for. And even if AMC closes down 3 or 4% today, we can open up 5 to 10% tomorrow. That's kind of what I think will happen anyways. Like I said, overnight is going to be the big time for digestion of all of this information. You're getting hit with a ton of information. It's very hard to forecast what this means for valuation of companies within, 10 minutes, half an hour, or even 2 hours of trading. A lot of money is moving around at the current moment, but we are getting short interest of free flow of 20.75%. And what I want to point out, due to this de-hedging situation on the short interest and with the option chain, you guys got to think about this. We've had the short interest in between 15 and 20%, and this estimate is very, very high. I think the short interest is much higher than that, probably about 25% in all reality. The real short interest in between 40 and 80%. But what you guys need to know is that most of the short sellers in AMC have been in this trade for a very long time, with still the average loan day at over 70 days, right? So a lot of these guys, they're in this for the egotistical battle. They don't want to cover on their short positions. But there's also, let's say, 5% of the short interest that just got into this trade probably about 2 weeks ago, because AMC is an easy target to be shorted as mid caps are going down. Omicron fears started to weigh heavy, and AMC is in a sector of the economy that would be hardest hit if any crazy lockdowns did happen. Hospitals got overrun, etc., etc. So those shorts, I don't think they want to be on the back end of a losing short position in AMC. In other words, when AMC starts to rally, those shorts, let's say 5% of the short interest, is going to want to get out of their positions very, very fast. And we do have a very high days to cover at 2.49 days to cover. So it's going to be hard for them to actually do this and to get out immediately if they want to. And I think that's going to happen because this is peak fear. After tomorrow, the big fear catalyst is gone off the table. We don't really have anything else to be super fearful about unless you're worried about Omicron overwhelming hospitals. Like I said, other than that, nothing to be really fearful about. And if there's no fear in the markets tend to go up. As well as the mid caps and the small caps, some of these stocks are down 50%. AMC down 50% since just where it was a month ago. So there's definitely a big bounce coming. Now, the estimated shares that are sold short, 106.49 million. Share utilization is 78.29%, which is pretty much in line with what we have been going over the past couple of days. Hasn't moved around too much as far as the share utilization, free flow out on loan, or days to cover. That has actually been going up. Now, as far as the option chain, and this is something we've talked about many, many times, and this is the main theory for the mega bounce that we are going to see, because we have so many puts that are in the money, that are deep into the money, and we only have 2 more trading days left until December 17th, where all of these options will either have to be fully hedged for or fully de-hedged for as they run out of the money tomorrow, Thursday, and then on Friday. So 143,000 puts that are in the money. That controls up to 14.3 million shares that will have to be de-hedged for. I don't expect all of that. Say we get a big bounce and 70,000 puts run from into the money out of the money. You're going to see 7 million shares that instantly have to be de-hedged for. Same thing on the call side. When the stock goes up, calls go from out of the money into the money, and that consists of the same thing. Market makers having to buy stock to hedge the calls that are now going into the money. With 2 days left to cover, that's going to be a lot of buying power. And you're seeing 443,000 calls that are out of the money, only 19,000 calls that are in the money. So expect a lot of volatility over the next 2 days, but I do expect this all to culminate into a big move tomorrow, or at the very least on Friday. Hedge funds, by all means, they could pile more money into AMC and continue to drive down the share price of AMC, but ultimately in the end, that will make that bounce just that much bigger. So that is really what you guys need to know. Let's talk a little bit more about the technical analysis where we currently sit right now. Just a lot of volatility, but I think we got the direction of where this is going to go. AMC is lagging behind just a little bit. Like I said, by the end of the day, this could change, but we got that bullish direction, and that's really what I was looking for. And we're seeing a nice little bounce to the upside right now, and I do think we are going to retest $26.50 per share, and then ultimately $28 per share, and then likely close in between this range. Say probably tomorrow, even in after hours. It wouldn't surprise me to make a big move to the upside. Your best case scenario is going to be retesting the 200-day moving average, breaking out above that, which is at $32.06 per share. Watch for a resistance around $35 per share as well. Watch for the downside of $20 per share. I don't think that is going to happen for a lot of obvious reasons. I think it would have happened after the initial report, as shorts basically are like, hey, are we going to continue to short the stock, or are we going to wait and see what happens? And then your ultimate worst case scenario is that 1750 mark. But I do expect a sharp move to the upside here, possibly by the end of the day today. Don't have much time left, like I said, but Thursday and Friday, as a lot of this will get de-hedged for. A lot of the option activity, a lot of the short-term shorts will be unwinding these positions, buying stock on the open market to send us up higher. Nobody wants to be on the back end of 4 million pissed off retail investors. So hopefully this provided you guys some clarity into this situation. I'm not a fortune teller. I don't know exactly what's going to be digested and what's going to happen tomorrow, but this is what the data is telling me. We have a much greater likelihood of seeing a sharp bounce than to see another sharp decline. So hit the like button for me if you guys are buying, holding, or if you haven't sold any AMC stock. Consider subscribing to the channel. Let me know in the comment section, what do you guys think about this video? What do you think about this mega bounce that is coming by the end of the week, in my personal opinion? Let me know that information down below in the comment section, as well as if you guys want to sign up for Public, get up to $1,000 in free stock. It only takes about 2 or 3 minutes to sign up and receive that free stock. And on Public, you send your orders to the lit exchanges. No market makers, no payment forward flow, straight to the lit exchanges, and that's where I've been buying like all of my AMC shares. It helps the movement. It's a very easy brokerage to use. You get a free share, I get a free share, help support the channel, all of that good stuff. Check out the pinned comment down below as well. Love and appreciate you guys. Thank you for watching this video. I will see you in the next one.